It is Friday, 1/10/2020. We've got Tackle Trading's crew here today to have some fun, talk about markets, break some things down, and even answer some questions. On Fridays, we like to do a Q&A section. Cody, I know you've got a couple prepared. We'll also be doing live questions with the audience out there. Team Tackle, great to have you. We've got Mark, we got Frank, we got Cody. First, for formal pleasantries, Mark, how are you doing on a Friday morning?
Oh, shut the Friday up.
You knew that was coming.
Oh man, that's a softball. That's easy. Frankie, how you doing, brother?
Doing good. Three things. Market's still going up. I still haven't got rid of my Christmas beard, and I still haven't got my computer or my laptop webcam fixed. So that's probably a good thing. I'm getting pretty grizzly.
Oh, dude, I had to trim down. It was getting too much.
I shaved. Yeah,
I noticed.
I had the beard.
Yeah, you're back to normal looking. I'm getting way too much gray in my beard to let it go this long, but
yeah,
I'm committed now. So,
dude, you're pot
Frank,
committed.
you need to get one of those T-shirts that says like, hippie, lumberjack, legend, wizard. You know what I'm talking about? It's got like a links down the shirt.
Yeah. I might have to. It's getting bad.
Now that you've described it, Cody, I don't know why we don't all get one. I mean, that sounds like a great T-shirt. Let's go pick up the old beard T-shirts and start promoting beard culture. I'm in the mood to just go after Cody today, so just be prepared, young man.
Let's do it.
Yeah. By the way, guys, you tell me how you feel about this headline I wrote down in my own notes here today. Overbought, overextended, overvalued, meh. The market doesn't care. I mean, we are overbought, we're overextended, we're overvalued. The PE ratios are coming in hotter than they've been in a long time, but the market just seems to not really care heading into the first of this year here, Mark. What are your reads on this broad market right now heading into earnings season, 2020, historic year in 2019? Am I wrong here?
Yes and no. Like, stop thinking. Like, literally, your brain does very little to actually make you money. The chart will make you money. Your reading of technical analysis will make you money. Your ability, and I'm not talking about you specifically, I'm talking about all of us, ability to try to put logic or rationale to the market, that's not going to make you any money.
Yeah.
Trust the chart.
Trust
Frank?
your eyes. Trust your eyes, not your brain.
Yeah.
Your eyes see, and your brain, well, it's your brain.
Yeah. It's tough.
What's the phrase? Believe nothing you hear and half of what you see.
I believe everything I see, Cody, at least when it comes to a chart.
Yeah. I mean, here's the reality is you guys are 100% right. I knew that was going to be the answer because you guys are technicians and traders. In fact, both of you, you famously said over and over and over again, trust the chart, read the chart, trade the chart. Frank, you actually probably go through the news less than any of the other coaches at Tackle Trading, not because you're not looking at it. I know you read through it, but it's not for your trading. I mean, you go look at the charts and that's how you make decisions. Is that just the best approach right now? I mean, just not overthink this stuff and just trade the chart.
In my opinion, it's always the best approach. Hey, there's a jam in the background. I always adhere to that. From a short-term perspective, the news, in my mind, well, for me, I know it does me more harm than good. I don't want an opinion. I don't want to care that BioMarin can't run past $90. Sure it can, right? So, right. For me, it's I like to be aware that the news exists, but I think literally nothing else about it, or at least I try my best to.
Mm-hmm. Yeah. Well, as of now, we've got a doji heading into the weekend. It's going to be interesting to hear you guys' rankings on the scouting report meeting that we do every Friday. We've been bullish. Do we upgrade it? We're at the all-time high, guys. I mean, do you keep it the same? What's your instinct right now on where we should put that marker for the S&P?
For me, it'll probably be unchanged.
Why change the bullish ranking?
Yeah, no, it'll be bullish.
Well, it'll be bullish. It's, I mean, you're talking
it'll be
degrees.
bullish, but yeah, in degrees of bullishness. I mean, the angle of the chart that we've seen the movement, I don't see anything that makes me want to come off of the current ranking personally.
Yeah.
No, I tend to pull back a little bit during earnings season as a general rule, especially as we get into the beginning of earnings season, because it's not happening really a lot lately, but some weird things can happen in earnings season. So I do tend to kind of just pull back as a general rule. Just, me, I'm kind of a wimp.
No, I'm with you. And we will be talking earnings each and every day next week, the week after, and the week after that, I'm sure, and even today, they got a couple of companies with earnings. We're going to be hot and heavy into it starting right next week with the financial stocks and whatnot. S&P, Dow, NASDAQ, then the Russell. Cody, flash fire through them. Just a little rapid fire. Let's talk and look at the charts as we do and end on the Russell because I do have one question for Mark and Frank about the Russell 2000. So quickly through the NASDAQ, the Dow, and then the Russell. Cody.
All right, so we are pushing, up to new high as we just covered on the S&P 500. A little doji on the Friday. I expect that just to be a little bit of profit taking on a Friday, as most traders actually do. Dow didn't see quite its movement, but we did get also an all-time high on the Dow today as well. A little bit more down, but that could be off of some of that as we're talking about the manufacturing sector versus some of the other sectors in pre-production. The NASDAQ has been the biggest mover of the bunch, and that's because tech has been the one leading the way. And that sector the NASDAQ is very heavily weighted in the tech sector. So we definitely understand the fact that this one has taken more of a lead here, but it's also got that doji coming into today. Finally, ending up on the Russell did not actually follow through as the other ones did and create new highs. It's still a little bit lagging, and it doesn't look like it's quite going to make that same type of movement. Most of these sectors are up, 1% or so above that previous resistance level, whereas the Russell is still down about 1% from that old high. Russell's kind of falling behind, and usually we've said it before back when we were expecting the breakout back on the 23rd, I believe it was, the 25th, excuse me. That this is one of the signals we were looking for. As long as it's been in that range, we said, wait for those small caps to start playing. And, when that really did happen, I mean, look at the rest of the sectors. When the small caps started joining, they all started running hard as well. So definitely like the way each of the sectors are looking, and you can kind of see the individuality between them. There's a lot of similarity, and it's easy to say, well, okay, well, they all look the same. But when you really start digging a little bit deeper, you can understand why certain sectors might be a little bit ahead or a little bit behind the others.
Yeah, there's no question. I'm looking at this Russell 2000 chart and I'm seeing general weakness. I mean, you guys are a trust the chart kind of people as well. And I saw this one and instantly I'm starting to think neutral here a little bit, Frank. Obviously a little bit bullish because you're above the 50 period moving average and we've got a pretty strong stock market in general. But Mark, when you come below the 9 and the 20 and you've got those weird candles in there, how do you interpret that price action? Because it's noisy. There's no question.
It's noisy, but I think you could be looking, I interpret that as high probability of future sideways movement. That you get, support bounce off the 50, you get some weird price movement. I mean, this really looks like a short-term consolidation pattern, which could develop into a longer-term consolidation pattern occurring, where there's not momentum to either side. And this is great news. Like a lot of tackle trading members, they use the Russell for iron condors, and everyone that has an iron condor on is like, I hope you're right, Mark. Like, I hope you're right, because that would be great for my iron condor. But that's what this pattern is starting to look like after this week's price action. I mean, granted, it just looks like it could be, stagnation for a while. And that would be great for iron condor traders.
Absolutely. Well, the thing about the rut is, while it can run like it's like nobody's business, it can also, like Mark's saying, can kind of hang out and just bounce around a little bit. I would agree with Mark's assessment there. Still, I probably skew a little more bullish than Mark from the sounds of things, but I'm not surprised to see that 1700 range kind of be a number. That's a big round number. We didn't quite make it, but when we started to see a little bit of selling there, kind of took that as an excuse, I think. I think we keep an eye on it. I think we could make an argument, especially if you look at the rut and not the futures, that there could be a little triangle that could develop in the days ahead, something worth keeping an eye on in my mind, but hopefully it stays sideways. I mean, that's what I want.
Well, that's what I want as well. Condors trader, neutral trader. Coming up next Wednesday, by the way, is the perfect sweet spot to be building that March contract the way that Tyler teaches in the system. And we do have that mastermind group for the iron condor traders as well. Yeah, neutral's good for most people who trade it this way. It's really interesting to watch small cap behavior. The breakout at 1600 was significant. And I'm going to be really interested to see if my prediction from our podcast a couple weeks ago, Mark, ends up becoming true, where the small caps outperform some of the big caps. So we'll see how that keeps shaking out. Let's move through the dollar commodity kind of space here for a minute. Let's talk about the jobs report. Bring up the dollar first here, Cody. Now, guys, I didn't get a lot of takeaways from the jobs report. I mean, I read all the headlines, I actually read the data coming out, from the U.S. Labor Department as well, like they put out the first Friday of every month. Delayed it a week because the holidays from last week. But we have a strong jobs market. I mean, the Federal Reserve is going to interpret this as very, very good for the jobs market. 3.5% unemployment. The only real weak spot I saw was in manufacturing, but that's a storyline that's been developing for a long time. This is a bear retracement. Frank, would you short the dollar here on confirmation if it headed down from here?
No, I wouldn't. I could see the argument for it. I wouldn't buy it. So if you made me trade it, yes. But luckily you won't make me trade that. It is just way too choppy these days for me, at least. So I could see the argument on the other side of it. We did break support, rallied, fired back the very next day on the dollar after breaking support late last month. I think there's reasons to look for better charts, at least if you're talking from a swing point of view.
Hey Frank, let me see if I can sway you a little bit.
Time out.
The dollar being a beautiful thing.
Time
Is
out.
that you can
Pause. Hold on real quick. This is the sign of Cody being triggered. He came in, he turned his video on. He has an opinion here. We're going to hear this diatribe. Go ahead, Cody. Yeah.
All right, there's one of the jabs Tim's promised me today. All right. So we see the chart, U.S. dollar. You said you may not necessarily like it, a little bit choppy, but one of the beauties of the Forex market is that you can actually look at specific cross pairs.
Sure.
So how about that chart?
Nope.
No?
Same general read, I would say.
I mean,
I don't think it's terrible. I don't think it's a terrible retracement, but I think you can and should do better.
I mean, I really like this breakdown retracement back into that previous resistance zone on the Canadian US dollar cross pair.
One of the complex things I have with the dollar right now, Cody, I'm not saying you're wrong about some of the charting setups, and there will be trades for Forex traders. There's no question.
Absolutely.
Frank passing on him, I understand that completely. And part of the reason why I might skip and pass on some of these dollar-based trades is the dollar kind of reacts weird to news. And you had new sanctions being imposed on Iran just today. We still don't know what's shaking out from what happened this week. We have no idea whether or not that's going to completely de-escalate like we've seen over the last few days or not. So until I get some clarity there.
Go back to that previous chart. I want to point something out. This is something like when I'm looking at something, because I don't spend a lot of time analyzing, eliminate every moving average except the 20 period moving average. Like when you're analyzing a chart, for the first time, or you're looking at things, I like to see how does this chart behave in relation to certain signals. How has it behaved in the previous months? The previous times something has happened, how has this chart responded? And so, we're talking about potentially a classic bearish retracement, which from a technical standpoint is a good pattern. But you look at the last couple times that it came up to the 20 period moving average, it usually hasn't stopped, has it? Like maybe for a day.
It's broken through.
And you've had a little counter rally up to a different level. So like from a technical standpoint, I usually like, everything that Cody's saying. Hey, your short-term bearish downtrend, rally up, maybe create a nice bearish signal, but that's not really how the personality of this one's behaved, has it? So that would leave me a little cautious. And that, whenever you're analyzing a chart, I always, ask people, I'm like, well, what is the personality of this company or this chart or this ETF? Because we have these broad technical principles, these signals, this ability to read a chart. And, those in a blanket can be really good. But how does this one, what's the personality of this chart? Because, different charts will have different personalities. And so like if it breaks through the 20-day moving average here, well, what's it done the last few times? You've had a short-term rally. So
do you guys still believe the old kind of premise in the market that Forex has a cleaner technical behavior?
No, I don't.
It depends on the time frame. It depends on,
depends.
Yes, I would agree. Yeah, it's a good answer.
Lawyer's answer is it depends.
well,
Yeah.
because short time frames, absolutely. Because who trades Forex primarily? Like
Day traders, algorithms.
day traders.
Yeah.
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 And so you'll see some of those day trade. I mean, Frank and I, back when we were in the same city and we'd look at charts, I mean, we'd be amazed. Like things would come down to a certain moving average, like an hourly moving average or a 15-minute, just stop on the penny and bounce.
Yep.
Like time and time and time again. So like, I mean, who trades Forex? I mean, you got large institutions, you got, this massive market, but who trades it? And a lot of those are really short-term traders. So
Yeah.
Most of the movement does come from large institutions, the banks, and the different countries that actually have to convert those currencies. That's where a lot of volatility comes in. The bank opens, but yeah, the actual traders are individual.
Yeah. So yeah, I would agree with that. I don't like it on the swing. On the intraday, I think it is pretty darn well behaved.
Yeah, it can be that way. But then again, that's why it's really tough to kind of scalp those pips, because it's been a slow moving product lately as well. From what I was reading some data on this. Volatility on a daily basis in the Forex market is down like 50% from where it was 10 years ago,
Wow.
And I don't know if that's just everything on a race to zero with interest rate policy around the world. But these charts, they do not fly up and down as much as they even used to. So I don't know. But let's move on. Let's talk about commodities here. Heading into the weekend is going to be really fun to kind of rank some of these. You got gold up here first, or crude oil, Cody. Nice pullback on crude oil. Now, I think this is tradable in a couple of different ways. I think the retracement, if it pivots back up, you can trade it. But I know that's noisy. I mean, Mark, are you just doing cash flow?
yeah, mostly.
Yeah. Naked puts down at like the 50 level would make sense to me. Frank, what about you? What are you thinking of crude?
Yeah, I would stay on the cash flow side. I mean, I could see a retracement developing, but this is going to potentially be very news driven and will beat the heck out of your technicals with the stuff that's going on. And so I think we got to be a little bit careful, but a little bit of upward movement. I could understand a more aggressive trader calling it a pullback and looking to get into it. That would not be me.
Yeah. And believe me, both are very viable right now. There's no question about it. If somebody came to me and said, hey, Tim, I'm going to do a delta trade. If it pivots above 60, I'm going to play a bull call spread, or I'm going to go long USO or some form of that, I could nod my head and say, okay, there's logic behind a plan there. Personally, I'm liking the bull puts and the cash flow kind of positions.
Let's go for specific signals I'm looking for here, because with crude oil, I mean, we talked about this earlier in the week that it's going to be very sensitive to the news coming out of Iran. Like when you have a de-escalation, I mean, what's going to occur? De-escalation, then all of a sudden, short-term trader, short-term computer algorithm, short-term everything is going to push it down. All right. So let's say we're looking for a signal to do even something in naked put. I'll show you the signal I'm looking for. Go to an hourly chart again. Because we never want to catch a falling knife. That's the big principle here.
Yep.
You have downward movement in whatever, at any point in the chart. You're like, all right, so this could be opportunity. And then you're like, all right, but we don't want to catch a falling knife where you just have heavy downward pressure. We want to try to optimize it as much as possible. I mean, so we're going to want to look at two things. We're going to want to look at a combination of intraday resistance, which can be found around, $60, over the last, what time frame are we looking at? The last couple of days.
Hour.
Yeah, and then what is that turquoise line there? 50?
50.
This is the 50.
Yeah. Moves across the 50. Now let's eliminate everything but the 50. We're doing, I always believe teach what you do. Teach what you do. And I look at these major hourly moving averages for signals of potential price stability. Can be used for directional signals, can be used for day trading signals, can even be used for swing trading signals, but it is the signal I use to signify maybe potential price stability, which is the primary thing I'm looking for in a naked put, because I'm looking for cash flow, I'm looking for stability. And so we see, like the last time it broke just a couple days ago below the 50, so huge movement down. So if we can get a closing candle above that 50 hourly, along with a little bit of confirmation in the next hourly candle, that would be for me the signal to say, hey, I'm going to lob a naked put at a lower price level to increase the probability that, you know, I'm not catching a falling knife, that I'm not, that momentum to the downside in the short term might have stopped. You know, and just wait for your, whatever your signal is, find some signal of reversal, some signal of price stability, and you'll really sleep a lot easier at night on those naked puts.
Yeah. Getting technical confirmation like that is a great thing to look for. And I love the analysis. Honestly, looking at that on the momentum side of it, you still do have a falling knife scenario here until you get some technical confirmation. So really good point there from you, Mark. Appreciate that. Let's look at gold and silver real quick here, guys. I like the pullback here on gold. Now you're getting a little different analysis here, and I'm glad that it was right on the hourly when we came up. Did we get that confirmation on gold here, Mark?
Yeah, let's take a look at this. Now, gold's obviously an area of the market that we spend a lot of time on. And what was I just saying? Like, once again, you can have a lot of signals. Look at how it responded to the 50 moving average. And I'm getting old. I hate how your body gives out as you get older, and my eyes. But go back in time a little bit. Back up in time a little bit. Notice how on the way up, that 50 hourly moving average, it found a lot of support, like on short-term sell-offs on the way down. So it just the reverse. The 50 hourly moving average is a significant moving average for a lot of different traders, short-term traders, intermediate short-term traders, a lot of traders. And that exact signal has just been produced this morning on a little price stability. Like a little price stability, which in our mega like analysis, our big thesis, we expect gold to not just fall like a knife right now. Like, you know, and so like, but waiting for that technical signal can help produce that. And once again, I'm talking from a cash flow, when do you sell puts, all of that can be used for a directional signal as well.
You know, for me personally, I've been using gold for years as a position trading vehicle. I think the swing trading can be a little bit difficult at times, but people can build swing trades around it if you get good, clean technicals. Honestly, you can trade any time frame if the chart is developing that way. I like gold here, Frank. What about you?
Yeah, I mean, we are seeing a little bit of stability. Actually, that bottom was kind of on that daily 9 EMA too. Mark's old girlfriend there. A little bit of stability, getting some intraday signals to the upside. I would rather, it's Friday. I'm old too. I'm not as old as Mark, but I'm wimpier probably. And so I'd like to kind of see some confirmation going into early next week personally, but we have seen a little bit of stability. I think an aggressive trader would absolutely call this a retracement opportunity.
Yeah, Friday commodities. I know that you end up taking a lot of caution with that on entry points, Mark and Franca as well. You know, and a lot of that is just that weekend volatility, making new entries into the weekend on raw commodities like this when they've been news driven. Feels like you can wait till Monday personally, but I
hate having to count down till Sunday to see if anything crazy happened to something I'm in.
Sure.
So I want to enjoy my Saturday.
But here's the thing about gold that I would make the argument. If anything crazy happens in gold.
Oh, I would agree. It's no natural gas. It's no natty gas.
Yeah. I mean, if anything crazy happens over the weekend, it's likely to help gold.
Yeah.
Yeah. Like, I mean, gold usually doesn't have surprise stories because like CNN isn't going to break out on Sunday morning saying everything is really good. You know,
sell
like,
gold.
You know, sell gold. I mean, that's not how price. So if anything crazy does happen, if you are weekend adverse, and I get it, gold is an area where, like, listen, if bad things happen, unfortunately, that usually helps gold.
Yeah, I would agree. Well, it's not so much holding it through the weekend, it's building it going into the weekend. If I had gold here for whatever reason, I would feel comfortable with that. But I just am not a big Friday trader as a general rule, and certainly in the futures market.
Yeah.
Frank is very European. You know, 4-day work week.
Yeah. Might as well call it a day when the European markets close at 10 o'clock. That'd be like right now, Frankie. Get to our weekend early. There's no doubt.
There we go.
I like it. Speaking of natty gas, I was going to blow through it, but quite frankly, we should have brought it up and brought it back. I'm glad you reminded me. Nice move here today off of the bottom. I know this is.
You blew through it.
You know, support-based bounce down here. Well, I analyze my trades more, Cody, when there's a problem, not when they're good, usually.
So you're going to
But
sleep a little bit easier this weekend.
well, I got bull puts deep out of the money, Frankie. I put them on just the other day, and I'm looking at this one, and I like the candle today. I know that you guys were bearish on natural gas when I was gone last week in the scouting report meeting. And Mark, you do the commodity report all the time. What's your read on natural gas down
Well,
here?
I've been talking about the potential reversal signal. Been very clear for the last couple of weeks. You have a trend line that was pretty pronounced, coming into a potential support area, creating a pinch. And a pinch is when you have, that is a terrible support line.
Hang on. I activated to drop it down.
And
There's your
so,
pinch.
and hone in on the last few days of price action. And so you have this pinch form where you have a resistance area, in this case, the trend line, and a support area. And so you have this compression pattern where support and resistance are compressing upon one another. Frank and I use the term pinch to describe this price action because price is getting pinched in. Well, eventually price has to break out of this compression. And that break came to the upside where support holds, break to the upside. Very encouraging for traders like Tim who have bull puts. It's a sign of price stability. Not out of the woods yet, but it is exactly what you wanted to see. And oftentimes that pinch, notice the breadth of the candle. Oftentimes pinches have, because you're compressing, price movement can be a lot more dramatic than you've experienced in previous trading sessions. Look how small those candles were in the pinch. And then you break out, and then all of a sudden, because guess what? We're not the only ones that saw that compression pattern. This is why trading works, is because we're talking about it, computers are looking at it, other traders are looking at it, and so you see larger price movement as people see the technical signal come in. Encouraging sign. It's the sign that natural gas cash flow traders were looking for. Not out of the woods, but definitely this week's price action was glorious for cash flow traders on natural gas.
You're batting around an important concept. It's kind of subtext to what you were saying, is that one of the important factors of trading is patience and understanding that. I mean, as this thing was dropping, zoom back out, we were all waiting for it to finally, break that trend line, and the patience of giving it those 2 months of kind of coming down into that port, and then a lot of patience right here in that pinch zone that Mark's talking about, until today where we finally get that signal that, we could look to maybe sell some more bull call spreads out of the money.
Well, bull put.
I mean, bull put spread.
Bull put, excuse me.
What you meant, yeah. But you're right, though.
Or naked puts on UNG if you want to take ownership.
I like both instruments. What's really weird, and I really don't, and I've traded this thing for 15 years, and I don't know the answer to this question, so I'm going to ask it. Why is this chart so different? Not the gaps, but just the support zones than the other one.
Pay attention to the raw commodity support levels in doing your analysis. You trade UNG, but you have more eyes, more computers, you have more liquidity, you have more pure price action in the raw commodity itself.
I would agree with that. Yeah.
ETFs can act a little wonky, but remember, UNG is it's reflective of the price of natural gas itself. Always do your technical analysis on the raw commodity itself. For crude oil, /CL. For natural gas, /NG. For gold, /GC. Yep. Do your technical analysis on those, because that's what matters.
Well, and there was a question in the chat the other day. Somebody says, well, Tim, I don't trade futures. And the answer, we had a good conversation about it, but the answer was, it doesn't matter if you trade futures, you should watch the futures charts. And I believe that's good for commodities, but also for the indexes as well. That 24-hour price action, it's really critical to get a smooth chart when you're on those futures charts. And I think they're a lot cleaner in many ways. That being said, most traders actually play the ETFs because of just the nature of the product. Not everybody plays the futures market. So I love the tip there, Mark. Very, very good.
Well, Tim, to answer one of the questions you kind of asked, why are some of these levels different? And it has to do with the actual ETF fund itself. The ETF fund, because it is a reflection of the futures and what's going on there, they're having to always roll out their contracts. They have to consistently roll out the futures contracts, sell the ones that are getting closer to expiration and buy the further ones out. So you're going to see lower price action in these ETFs because of the fact that they have to sell out those contracts the way they do.
Which, by the way, leads to one of the biggest mistakes I see beginners and even intermediate and veteran traders make all the time is they hold on to those triple leveraged ETFs. And they don't even know what the product is. I just scratch my head. I shake my head, like things like UVXY or, the really volatility based ones. Some of the more complex ETFs, Mark, they're really not for traders, quite frankly. They're usually for institutions or hedges or computerized trading. I see people make mistakes with these products all the time.
And you bring up UVXY, and I want to make an important point on UVXY. UVXY, when you look at this craziness, UVXY was never worth $20 million at one point. This is when they're constantly having to roll down that triple leverage and,
That's right.
and split and split and split and split. This is not, it was never worth this and then just lost all that value. You can't, and this isn't even a shortable instrument for that reason. You can't think, oh, look at this, I'm just going to short it. You can't even short it because of the actual nature of this beast.
Frank, the thing about it is Cody probably didn't know that I was going to bring up UVXY. He's been waiting to make that point on that product for probably a year. And this was a gift to you here today,
It's
Cody.
a softball.
Finally, I've been waiting for this UVXY. Yes,
See, that was
it.
funny, Tim. Why can't I get more out of that out of you?
I need more
that was
funny.
And then Cody walks away from his computer.
I had to let my dog back out. He pushed the door open and my wife's on the phone outside, so I didn't want to.
Let's flash. Very good, young man. Let's flash through some stocks here real quick. A couple with earnings, couple with news, some that I want to look at from the reports and things like that. Start with KB Home. The home builders have been on our mind. We've been discussing them, tackle 25 candidates. We put a few home builders on there as well. Here's KBH, had their earnings. It was looking like it wanted to break out, Frank, and they just missed. They had a miss on their EPS number, gap back into the range. And this is a dividend payer. When I see a miss like this into a range, into old resistance, into moving averages, it doesn't make me put it on a bearish list. In fact, that green candle today is playing a lot of defense. Frank, interpret the chart for me on KB Home, if you will.
Yeah, that's a really good point. And we had the gap down. Initial response is very bad, right? Very negative. People wake up this morning and think, well, that's dumb. And that's a very, very strong candle. And ironically, it actually maybe helps the potential breakout 2-3 weeks from now, where all of a sudden we kind of reset a little bit. We know what those earnings are. We know what the response is. I'm going to be interested to see as we test that. I also think it's really important to note on things that look like this, where we catch our footing there on that opening gap. So today's low, in my opinion, will become a pretty important price. If that gives out, I would expect to potentially see some selling back down towards that 32, where we have all of that support. As that holds, I'll keep this in a breakout watch list personally, as long as that is holding, for as long as it takes, quite honestly.
Yeah. Very different gap down, though, on Six Flags on the earnings. And by the way, you're going to get a lot of earnings analysis over the next couple of weeks because it's what's going to dominate the market. Bring up SIX if you can here, Cody. And this is more of a runaway. See you later. It's getting spanked here. Six Flags down 13% on an earnings miss. I can't remember the last time I went to a Six Flags. I know there's one in San Antonio, Cody, Texas. They're all over the place, but man, people aren't going. This company missed EPS numbers. They downgraded their outlook for the entire quarter, and they got earnings coming out here in about a month as well. Mark, when you get a gap down like this, 13% on lowered guidance, is there any trade there? I mean, could you play that?
I so want to make a bad roller coaster joke, but I can't think of one that's actually funny. I hate roller coasters.
Well,
who goes on roller coasters and finds them enjoyable? I know millions of people do. I know. Millions of people do.
I'll get on the Texas Giant or the Titan and ride that thing over and over and over.
Texas calls it the Titan.
I see, the roller coasters are not the reason I don't like Six Flags.
Six Flags started in Dallas, or actually in Arlington, Texas, with Six Flags over Texas.
Well, look at this chart. It's going to end in Texas too. So
there you go.
So I mean, I don't trade Six Flags. I've followed them and listened to the CEO talk and things, and Yeah, but the sales being down like they are, it is hard to ever really actually trade this company.
I mean, Six Flags is a
I
pretty
think the
easy.
one thing that I thought was very interesting, which also surprised me, that it's getting beaten up so much.
I mean, companies like Six Flags are pretty easy companies to analyze. What are the number of customers through the gates? What's the revenue? I mean, the trends are going to be very apparent one direction or another, and they can really set, because there's not a whole lot of metrics to judge a company like Six Flags. I mean, there might be specific, like how they're, the profitability and this and that, but are more people going to Six Flags than have been? I mean, looking at those, understanding the company post earnings, like what drove it down, because not only did it gap down, but the price sold out afterwards as well. And so like there can be some, if you understand the company, understand what's driving it, there can be some nice setups in the weeks to follow,
Yeah.
But I haven't looked at the earnings report yet, but I want to see, like, where are
Well,
your
even looking
customers
at the
going?
chart, I had it in my notes that it was an earnings miss. It wasn't earnings today, was it? It looks like earnings are next month,
No,
Frank.
it was the dreaded bad news before the earnings.
Oh, so did they come out ahead of time?
Yeah, they lowered their guidance for the year. So that's
And
not good. That's
so,
not good.
and if they lowered not only their profitability and revenue numbers, but whatever other metrics that spook the market, I mean, if you put that on a monthly candlestick, I mean, this is like looking like, that TP pattern, nice. I mean, that's pretty nasty downtrend right now.
Yeah.
That's pretty nasty downtrend.
Ugly, bearish. We'll wait for a setup on it, but definitely bearish. Anything to add to all that, Frank?
No, I mean, that pretty much sums it up.
Yep.
There's no bullish signal right now. You're a ways away from it. If you are a believer, you've got some time.
Yeah, for
Roller
sure.
coasters suck. Everybody's going to use augmented
do
reality
not.
glasses one day to get that same thrill.
No, it's not the
They're
same.
going to sit in their house on their couch. They're going to put on their glasses in a vibrating chair and, go on the Texas Titan.
I don't love roller coasters. I don't need to go on them over and over again, but when I go, they're fun. Dude, I'm going to tell you right now, one of the best things I ever did in my life was went to Coney Island and rode that 130-year-old roller coaster that made me feel like I was going to die. It's a wood one. It would fall. It would shake. It would make all these sounds. And I'm like, okay, this is real. This is cool.
No, I do agree with that, Tim, because I said the Texas Giant at first. That one is an old wood roller coaster, and that thing, the entire thing shakes when you're on it.
Human beings are insane.
No, Six Flags needs to tear down the wooden roller coasters and rebuild them in steel. Like make it the exact same
Listen,
design.
I don't like it where your stop loss is a notification to your next of kin. No.
Oh, all right. Let's keep talking about some of the stocks I got on my radar here today, guys. Quite frankly, there's a lot of stocks and reports. I think we're going to see some repeat candidates from last week to this week on some of those triggers and setups. Frank, we're not light on setups this week. There's no question about it. You got retracements, you got bullish, you got bearish. I'm expecting a good week of reports. Let's look at some from last week, though. BioMarin, BMRN.
Yeah, I wanted to bring that one up because I wanted to talk about what do you do when
that's my question. What
do
you do?
A good problem to have, right?
Yeah. So here's the way our Fridays go, guys. After the halftime report, we spend some time researching and putting picks in. Frank, your picks are probably already in. Many weeks they are this early. Are they?
They're about done, but they're not in. What I do is I run through about the first 60 or so percent before we get into the halftime report, finish up and kind of reevaluate, because some of them I'm putting in before the market opens into my watch list for next week. And just because of the way the day went, I'm like, yeah, that's not something I'm interested in anymore. So, but yeah, other than, a lot of financial earnings and a lot of earnings in general in the next little bit. So there's fewer than usual, which is always the case this time of year, but there's some interesting setups developing.
Yeah, for sure. And you pretty much lead the number of picks, I believe. Do you go through every stock in the market?
I go through every stock that has options and does more than 1 million shares. And depending, either is over $7 or $10.
Mm-hmm.
So over 10 is a safe number, but sometimes I'll go digging around for some cheapies.
I got you. So here's the setup, Mark. If you're a pro member of Tackle Trading, you get these weekend picks, and there's usually 10 bulls on the option report, 10 bulls on the stock report, 10 or so bears, and it depends on the week. Sometimes a few less, few more on both reports. So about 40 qualified trades just from those two reports, not to mention the commodity and the Forex stuff. Okay. If you're not a pro yet, there's a link in the bottom. You can try it out this weekend. Go see the reports, but that's not why I'm bringing it up. BioMarin already hit your second target here, guys. What do? You here we had a trigger above 84.40. It triggered, it moved, and just within the 1 week, we hit 86.50, target one. And now we are already up here at 92.42. And target two is $90.
Yeah.
Everything
All right,
worked great. Do you knock down the profit and move on? What do?
Well, I mean, listen, once again, you want to eliminate you from the equation because you are likely terrible at making good decisions
Mhm.
because we're human beings. You know, I love the headline. I haven't read the daily email today. It's like human beings are terrible traders or something like that. And I was like, that is so true. Like, if we can eliminate the us out of the equation. So my question then for anyone in this situation, good problem to have, right? Good problem to have. But what is your signal to get out? What is your constant, I'm going to eliminate myself from the equation each and every time? Now, do you just take the profit? Now, if you do that each and every time, then, hey, that's a plan. Nothing wrong with that. But, you know, we want to maybe be a little bit more sophisticated than that. You know, a lot of times I like to use those like hourly moving averages to like try to maximize the profit I can make and still have a signal that gets me out at my general level that I was looking at. And we don't have time. This is a great Traders Lounge question or something else. We don't have to have time to go into a full, like, what are your exit signals? But like developing exit signals in this situation that can protect your profits, but still give you the capability of making more is something that you should absolutely look into. Something we would be happy to help you if you're not a pro member at Tackle Trading, whether through the lounge or, you know, an email to me at Team at Tackle Trading. But finding ways to protect your profits and give you the capability of making more money, that's a pretty good situation to be in. Where and you don't have to think. You're just like, if signals hit, I get out. If it's not, I keep making money. That's where we want to find ourselves in our trading. We don't want to have to be asking abstractly, well, what should I do here?
Yeah.
We want to have
Well,
that already
that's
mapped
all
out.
very good stuff. I would 100% agree with what Mark said there. But I mean, I've still not even got a 15-minute sell signal on an intraday chart on this, Mark.
And so you
And
would
there's
still
still
be
some
in.
time. I would absolutely still be in. I think, you know, in situations like this, I mean, scaling out is very much on the table. My general philosophy is scale out at the first target, and so. But scaling out would be a legitimate option. If we're trading an option, what about rolling it up? You know, maybe we started with an 80, 82.50. Now we're chilling out at $93. What about rolling that up, trading
I'm
that
with you
boy in?
there. And I know that, like Coach Noah, he will do adjustments where he'll take a long option into a bull call, things like that. But then we're talking about advanced mechanics that are dependent on the trader, right? You know, if a trader has that in their system and it's predefined and pre-designed, 100% high five, go for it. But there's no weakness in this chart. It's like
Yeah, these are always the tough ones for me because it's not the sell signal. I listen to my signals. It's the lack of sell signal. You know, I want to let, you know, something run because who wants to sell it today, right? We got to make the decision. There's no doubt however we're going about that. In my experience, though, one thing I've noticed for years is we tend to think in terms of stay or go. I have to do one or the other. Every time I'm talking to someone individually, I'm always bringing up, you know, scaling out because a lot of times we just don't think about it. Should I leave? Should I go? Well, I have no idea. If I knew, I would tell everybody here, of course. But I can scale out, lock in positions that way. Still good term. I don't want to put my stop loss below the 15-minute 9 on this much momentum. Maybe I'm right. Maybe I'm wrong. I don't know. But I want to give this some room, but I want the best of both worlds. And in my opinion, scaling out, or if I'm long a call, you know, it's not all that complex. I bought an A250. I'm going to close that bad boy and now I'll buy a 9250, right? So I'm not doing anything too crazy adjustment wise to lock in while still giving myself an opportunity for a runner. I want to give it a little bit of room personally.
And by the way, Cody, I just saw your message. We will make sure that we are done on time here today and be efficient with our last 10 minutes. Okay. But here's the thing, Mark, to your point, if you're going to scale out, that shouldn't be a human reaction just because. That should be in your trading
That's my
plan.
main point.
Right.
Because I mean, everyone here would agree with the fact that it would be nice to give yourself the opportunity that if you have a runner, some of those big runners really make a big difference in your bottom line.
They make a huge difference.
Oh yeah, for sure.
But having it mapped out on what you're going to do instead of guessing when it happens, like that's where you want to get. You want when the money's flowing in or out, you want to do as little thinking as possible.
Well, it's not just BioMarin this week, guys. You guys crushed it on the bull picks last week. So the same problem about how you deal with BioMarin, Facebook, you guys had on the bull report. Look at Facebook real quick, Cody. Facebook had a killer week, and it actually did hit the first target here just today, 218.50. So whether you scale out or not here, Mark, you got problems with Facebook too, but you got to have those decisions made in advance, don't you?
Listen, you're going to have a lot of winning trades, and that's a good problem to have. But you really want to map out how you're going to manage those winning trades consistently before they become winners.
Yeah. And if you've not gone through the step system course, I would highly recommend it. At least give you some structure and how to think through a trading plan. But you're right. Plan your trade your plan, keep your emotions out. And in my history as a trader, I am a Jesse Livermore believer that you're patient when you're winning. Be patient when things are good and be quick to get the hell out of there when things are not. Get rid of losers pretty quick.
Yeah. Another option just before we move on could be, hey, that my second target, because for me, it's the hardest when they just go crazy right out of the gate. Like I said, it blew through the first target. I didn't have time to think, about anything. And that's where I do most of my decision making and let it run from there. Another option would be just to, hey, my second target was 90. Let's throw the stop at 90. Let's see what happens. I guess that could be an option too.
I'm reading through a book right now that really goes deep into the psychology of trading and talks about how, the greatest weakness in any trade account is the trader themselves. And his suggestion was literally, if you're a beginner, you're still trying to learn to control your own emotions. He was like, don't trade when the market's open. And when you think about it, why would you?
I very rarely do.
When you think about how do you trade when the market's closed, then you have to pre-plan everything, your stops, your entry, your targets, your exit strategy. Everything has to be pre-planned if you're not trading when the market's open. And I think, as a simple, easy rule of thumb for beginners, that's a good piece of advice.
Yeah, I mean, it's hard because there's some techniques. I mean, because I use moving averages like the 20 hourly. Like my go-to,
you kind of have to be around.
My exact go-to in this situation would be the 20 hourly. Like I'm going to give it some room to move up, but take some and that's really hard to trade. I mean, it's almost impossible. I mean, sometimes people will be like, well, what is the automated signal I can use? As like your eyes on the chart. But you can use horizontal support and resistance. That is absolutely something you can use in this situation.
I'm going to trade while the markets are open. There's no question. It doesn't remove your point though, Cody, that for a beginner, if they are emotional and they're making mistakes, I mean, learn to plan it at night if you're trading that way. And as you get better at executing your plan without emotion, then you can add the complexity in there. There's no question. Guys, we got to step on our foot on the gas here. It's been a fun show. We got 5 minutes though. And I promised the crew some questions. Cody, I know you pulled some from the clubhouse, I believe. I'll answer those in the clubhouse after the show. I'll go in there and manually do it. Leave those on the table. I'm just going to go through the chat. I saw some good Q&A coming through our Team Tackle members who are here live, and I'm going to give them precedence, okay? That work for you?
Love it.
All right. Mohammed says, Coach Tim, historically, will there be a sell-off around January 20th? Do you think we have another one in January 2020? If yes, what will be the sign? Mohammed, I will tell you on January 21st if there will or will not be a sell-off on January 20th. I have no idea. Mark?
Yeah, that's a tough one. A couple things I'll be watching is the break of support. I do my analysis on the S&P and not the ES. Personally, I use the indexes. So the break of support, along with breaking and closing below that 20-day moving average. That will be the real weakness signal. The combination of those two in particular would say, yeah, you know what, maybe maybe I need to take my foot off the gas a little bit here.
You know, fun couple stocks that I see brought up by Emily here, Match.com and Planet Fitness from Cody. It does beg the question, maybe we can put it out there on Twitter or something. What are the like watch list candidates for the New Year's resolution watch list? You've got Match, get a new relationship. You got Planet Fitness, Mark, go back to the gym. Maybe a Weight Watchers, WW, you know, lose some weight. Are there any of the companies that come to mind here? New Year's resolution companies?
Listen, hooking up and finding love is a 365 endeavor. So like I've made my stance on Match on that company very clear. I am a huge, massive believer in the long-term viability, profitability, and the moat it has, where it's at. I'm on the record. I am a Match. I am a, what do they call it? Ride or die. I am ride or die on Match.
Here's all I know. This is when Mark was on Match. He decided to take a break for a little while, and this
like
Mark got back
seriously,
on
like
Match.
you know,
Correlation.
like, I've been back on. You know, like I've been fueling my, you know, those profits. No, but I'm huge.
The
Like,
news event right here was Mark saying I'm getting back into the dating world, and it just people started buying.
Like Match, any major bullish signal like we had. I mean, you look at Match where it like crossed the 50 moving average. You got a confirmation signal up. Great directional signal when you get huge dips. Match is I mean, not to get in a home match. Match is prone like whenever there's Facebook news about dating. When Facebook, oh, they're going to do dating. Facebook's dating sucks. It is a terrible platform that nobody will use. It is not a threat to Match, but because stock market analysis haven't been on a date in 47 years, you know, they don't know how to like judge this. No,
Yep.
huge Match, ride or die, selling naked puts, doing directional trades. I love this company. So, but it is a 365. It's not no New Year.
I'm sorry, Tim. I got to add this one quick thing. It's not even related to Match, but related to that kind of, see the scoop where we kind of stabilized our floor, popped above that 50. Keep your eyes out for that pattern. We've seen that lately on obviously Match. That was the signal on gold a couple weeks ago, right?
Yeah.
We recently saw it on Mickey D's. That is a really good signal if, you know, on these things that have pulled back a little bit deeper. You know, I call it the scoop, but you can call it whatever you want to do, where McDonald's big drop, flat lines out, finally pops above that 50. I like that as a reversal signal quite a bit. And you see it a lot.
McDonald's here, yeah. For sure. No, very, very good call. And Match was in that short-term downtrend, took some time off. They rekindled their love mark, came back. They're stronger than ever. A couple of quick ones here. My short strangle with KB Home, paid for a month to tackle trading. Ilka, I always love reading that. And Ilka short strangles are an advanced system. I'm sure you've learned about those in the trading lounges and labs and all that kind of stuff.
Awesome to hear.
Very, very cool to hear. Mohammed, would you please analyze Uber? There's not enough history for Uber. That's got about a year of IPO data. Actually, Mohammed, I think it does have enough history to get a good enough read on the chart to read this. This is an inverted head and shoulders, Frank. I mean, there's reversal signals all over that chart in there.
Absolutely. Absolutely. That's exactly the first thing that jumps out.
You know
we
why?
haven't broke.
Because you got to get an Uber to go to the bar to go on your match date.
See, there you go. There you go. See, everything's correlated. But you're absolutely right, Tim. That is a potential reverse head and shoulders. Still haven't broke. So we still need to break, in my opinion. I will always advocate for that. But a very interesting place right now on the chart. Respect that resistance. It's knocked us down on multiple occasions. Don't assume it's going to be easy to get through that. But if we can turn that, that would be a signal that there is maybe we've got a new upward trend that we can work with in the days ahead.
You know, I think this one is inviting some interesting comments potentially, but Emily says, what's your protection on Match, Mark?
Emily, you did that on purpose.
And Dina, real quick one. Dina says, new trader, is there a margin difference between iron condor or trading legs separately? Not if they end up in there as an iron condor. There might be a commissions difference, Dina. But if you end up with the same 4 legs of a condor, the margin should have been the same whether you put them in all 4 at one time or one. And guys, there might be a question I missed or not, but we got to wrap this thing. Fun show Friday.
Awesome,
Mark,
as
always a
always.
lot going on Friday, getting ready for the weekend. I know you do that commodity report for tackle
Yeah,
trading.
and I will be doing. I will be going over commodity report live tomorrow at noon Eastern, 10 Mountain Time. So if you want any excuse to not do what you were planning on doing on a Saturday morning, we'll have that up on the calendar sometime today. But tomorrow at noon Eastern, going over commodities. I like doing that report live.
Yeah,
It's,
yeah. Getting a lot of good feedback from it as well. I mean, people seem to really enjoy, breaking down all those commodity charts and hear your thoughts on it. So looking forward to that. Frank, I'll see you in the scouting
And if you have
report.
questions on match, I maintain love and sex are commodities. And so I'll be happy to cover those.
Yeah. Yeah. All right. All right. Fair enough.
Yeah,
Well,
there we go.
All
okay.
right,
Have a great weekend, Team Tackle. We'll see you on Monday. If you are not a pro member, you can always get a 15-day trial in the comments and the link below. Go and get those scouting reports from the weekend. We're going to go bird dog for you and get you some good picks. So
Absolutely. Keep your eyes open on those earnings dates too. You got to keep those in mind this next little while.
peace out.